Paul, there is a ton of clickbait articles out there by a lot of YouTubers. They have their thumbnails, they have their faces, they're giving the O face, and they're screaming stock market crash right after they say how massive predictions are going to happen for all these EV companies. And the very next video is how this is all going to come crashing down. But perhaps we've duped you because the title of this video has something to do with the stock market crash, but we want you to be prepared for this. Probably not be in some of those high-flying stocks and be ready for an overall opinion of how can I prepare myself as a normal value investor moving forward. We get questions on our Discord from the patrons all the time, Paul, is where should I have my money? Should I be sitting on a pile of cash? Should I sell out? I did this prior to COVID, got very lucky, sold all my stocks and was sitting on cash during COVID. But that's probably not advised for most people. So I want to hear what an incredibly wealthy person who is very wise and a Santahili guru in the market of.
I have no idea what that was.
I don't either, but if someone believes in value investing, how can they prepare for the inevitable crash that's going to happen at some point?
So before I get into the actual metrics that tell me there's going to be a crash coming, the first thing I'm going to say is no one in this world knows when it'll happen. I shouldn't say no one in this world. If there's anybody in this world knows what's going to happen, it's literally probably can be counted on our two hands, and they're probably not going to tell anybody because they want to capitalize on it. That's one. Two, the stocks that drove this market to the massive bubble it is will be the ones that are the biggest falls in the crash. If you look at 2000 tech bubble was NASDAQ driven. The S&P fell by about half, maybe a little less. The NASDAQ fell by 83% from peak to bottom, okay? These are big drops. What companies are those? EV. Unfortunately, Amazon, Apple, Microsoft are very big. They need to fall too, but a lot of these EV companies need to go to the wayside. When we look at valuations, in the short run, all stocks are a voting machine. Whichever is most popular is going to win. That's the way it's been. That's the way it's always been in every single bubble. In the long run, what's behind the company? A stock, a weighing machine. What's behind it? The cash flow, the balance sheet. That's what wins over long periods of time. There is an indicator that's been called the Buffett indicator because one time Warren Buffett said, pretty much the most reliable value metric at any given moment is the stock market to GDP ratio. On the gurufocus.com, you can find it. Right now, we are significantly overvalued at 205% of stock market to GDP. Keep in mind, anything above 138% is considered significantly overvalued. This is the highest level it's ever been, and it's projecting negative 3.4% returns per year over the next 10 years. That includes dividends. So to get the actual price return, take out dividends, you're at negative 4.7% a year returns for the next 5 years. That means the market right now at 4,300 should be in 10 years around 2,600 or so. Sound crazy, doesn't it? It is crazy, but it's probably going. Does that mean it's going to go from 4,300 to 2,600? No. What's more likely to happen is it go from 4,300 down to way below 2,600. I've said before,
1,500
to 1,800 or so is when I'd be buying. I'd be buying at higher levels than that, but individual stocks. Should this scare you? Depends where you are in life.
I'd have to digress, Paul, because these hype YouTubers that I see out there. If you're new to investing and you just simply click on YouTube stocks to buy, you will find these high flying, very risky, volatile stocks being pushed by imbeciles out there. But Paul, you are spreading the FUD. This is their new thing, Tim.
I heard this 20 years ago.
Uncertainty and doubt. So even bringing this up, Paul, these high-flying EV stocks, they're going to go to the moon, and you're just fudding us right now. You're the problem.
For anybody who thinks that, go look at Intel, Microsoft, Cisco, Amazon, the companies that made it from the tech boom of 2000, and see how much their stocks dropped from peak to bottom. Mm-hmm. And some of them haven't even rebounded yet. Cisco and Intel still haven't rebounded to their price from 2000. So I don't want to hear that crap. When I hear that, I just laugh. This is what matters to me long run. If you're a regular person saving for retirement, don't worry about this. Buy your ETFs month in, month out. You're going to overpay and you're going to underpay at times. Don't take the guesswork out of investing. Just do it every single month, dollar cost average. When you wake up 30 or 40 years from now in retirement, you'll have so much money, you'll be so happy you never thought about it, right? If you're a specific investor with a portion of your money or buying individual stocks, be very cautious about what stocks you buy, right? Another valuation metric is the Shiller PE ratio. Look at this level. Second highest of all time. This point was 44, and that was at the tech boom. Look at how high this is, 38. Even the Great Depression only hit 30. This is back in 1928.
What does this graph tell me?
This is the 10-year cyclically adjusted PE ratio. What it does is it takes the last 10 years of S&P earnings, brings it to today's dollars with inflation, and takes the stock market price divided by that, and that's what you get. So right now, based on the last 10 years of earnings, we're selling for 38 times the last 10 years earnings when brought to today's dollars. The highest it ever hit was 44 in the tech boom. We saw how bad that was. And the second highest ever hit was still 20% below today, and it was in the Great Depression. So if you think stocks are overpriced now, I mean, if you thought stocks were overpriced back then, stocks fell 86% from this level. 86% stocks fell in the Great Depression. We didn't even touch that right now. We are way past that. We're a 20% higher valuation. When stocks do fall, which it will happen, it will be fast, it will be ferocious, it will be ugly. It will wipe people out. We have highest level of margin debt in terms of history. That means people are borrowing a ton of money just to buy stocks. Think about why bad that is. Think about why that's bad. When you borrow money and stocks fall big time, the bank's going to tell you you need to cover that. How do you cover it? Sell stocks. So you're going to have to sell stocks. What does selling stocks do? It begets more falling prices. It's going to be ugly, guys. Look at last year's COVID. We fell. There was the fastest bear market in history.
Yeah.
Am I trying to be a fearmonger here? Absolutely, guys.
Yeah, well.
It is bad out there. If you don't think it's bad out there, watch out. You're going to be the last person leaving that theater because you don't think the fire is coming. And everybody's going to try to, you're going to think, oh, I'll exit before everybody else exits. You will not.
Tell me, go ahead, Mo.
And this is only two metrics. I said to Paul, before we started the video, I said, Paul, you pull up this metric, this metric, this metric. He's like, I'm only going to pull up two. There are so many metrics out there. I say it always on the morning show. It's not just this one thing. It's not just the Buffett. It's not just the Shiller. It's all of these just building into this basket. Something's going to break, and it's going to be bad.
Paul, we get a lot of questions from our patron members, and maybe this is dumb enough for me just to say is, can I just go in and put a stop loss on all my holdings right now?
Yeah, you can. Of
course
You wouldn't
can.
be opposed to that? Even my little book stocks? Like, can you?
No, don't do that.
Not even 25%, 30%?
Remember,
No,
Seth,
follow a process.
you're doing it over a 30-year period.
That's true.
And remember, the other thing is, the little book backtest was through the crash of 2000.
Correct.
Yep, okay.
It's all about stick to the process you've picked. And the little book process is buy on this date, a year from now, rebalance. A year later, rebalance. Don't touch it in between. I don't care what happens. If Jesus Christ himself comes down and says, Seth, you need to sell his stocks, guess you're going to tell Jesus.
Well,
sorry, sir, can't do that.
Buddha told me something different, but the point is,
you can't do it. You don't do it. You don't do it.
Some of our patrons are taking the little book stocks and then adding our 8-pillar formula to them to get their own kind of ETF. They're kind of customizing a thing. I just didn't know. Can I just put a general?
As long as they stick to that system.
If that's their process, that's fine.
Yes.
But stick to it. Still don't sell. Because that's your... Paul and I have a modification that we've done. We're not doing exactly
We have
the
our own magic formula. We're not deviating from
but
that.
it's the same not selling that we're doing.
But guys, when you bring emotion into it and you try to guess when these things are going to happen, you're going to lose out. That's the thing. Unless you're like me, who is fortunate enough to have more than I need, 8 to 9 businesses upstairs, 600 apartments. I have tons of revenue where it doesn't matter if I'm wrong on stocks for a while.
So how can a normal person prepare for the inevitable?
It's all psychological.
It is.
All you have to prepare for is stocks will likely fall big time from here. I'm okay with that because that gives me an opportunity to buy more into the future at lower prices. That's what you have to sit there and rethink over and over and over again.
But if I don't have any money left when they
Why would
fall,
you not have money left?
Because all my stocks just fell.
Well, you have less money. It doesn't mean you have no money left.
Okay.
If you really can't stand the sight of your stocks going down in half, you shouldn't be in stocks. That's just it. And if you can't stand your stock, by the way, you have to be honest with yourself. I literally had conversations in 06 with friends who I said, if stocks fell in half, what would you do? Oh, I'd buy more. Stocks fell 30% and they were literally selling everything.
Yes.
So experiencing it versus what you say you would do are very different things, right? Very different things. Just like when in the heat of moment, what if somebody sits there and says they're going to fight you? Oh, just walk away. Then all of a sudden you're involved in a situation where tempers are flaring. All of a sudden somebody wants to fight you. All of a sudden you're swinging, right? It's easy to say what you would do. Just indoctrinate yourself into thinking a certain way. This channel, it's all psychology. Me, check out my Instagram. I have pictures of me kissing the screen when stocks are down 7%.
Yes.
Literally, I brainwashed myself into loving stocks being lower.
Do you think you and I will ever come to blows with the sort of fight? If we get into a big fight, do you think you and I will start getting...
Have we ever gotten into a big fight?
I watched Seth try to wrestle you, and you screamed and ran.
Literally,
so
he put his
that
hand on
never
my
got
arm, my shoulder, and I was like,
all
we're
he did
done
was-
here.
All he did was go like this, and it was
I've
game
never gotten
over.
to blows
Paul's
with any
running.
friend.
What's that?
I've never gotten to blows with any friend.
I don't think it would. I don't think it would, but I just
As
wondering.
long as you stay in line and be a good boy, we'll all be good.
So, so that's just it. I am dead serious. Can I go in today, Mo, and set stop losses for my non-little book stocks?
Sure.
And then when everything does come crashing down, it'll auto sell on me, and I will have cash ready
Yeah.
to buy at the bottom.
Go for it.
What do you think, Paul?
I think it's wonderful to do that if you like it. But just be ready to buy more when stocks go down. I mean,
Well, I
listen,
love that.
I believe if you buy a good stock at a good price and it goes lower, you just buy more. You don't sell it and wait for lower prices. You just buy more. Actually, I have total disagreement with you.
Well, again, if all my money currently is tied up in stocks,
Why are you trying to guess what's going to happen in the market, though?
I'm
You don't
not.
know.
I'm just wondering. This is a
just wants
question
to
I
keep
brought up.
gains.
I mean, so like when you say
I don't
buy,
think you guess it. I think you just sit there and stick to your method and buy. If you have stocks you picked individually because you thought they were low priced and they go lower and you still believe they're low priced and they're still good value, what do? You buy more.
Well, I guess my point is I won't have any money in my account to buy
are you still
more.
making money every month?
That's true. I see. Buy more then. I got
Yes.
it. Yeah. I mean, like, yeah. I'm really thinking. We definitely get this question
You know
on
the
our
studio
Patreon.
here right now? Like we're doing something here that generates revenue, right?
I know. I'm just talking about for other people. They've asked this.
Well, they have jobs.
Just buy more.
Buy more. Just stick to your plan. What's your plan?
Buy the dip. Finally get to buy the dip.
$1,000 a month. If that's your plan, $1,000 a month, you buy $1,000 a month, whether stocks double in price or fall by 80%.
That's true.
You buy $1,000 a month
Yeah.
because you're still putting money in the market at very low rates, and over long periods of time, your average is good. That's why it's called dollar cost averaging.
Well, Paul, I think when you say stick to your plan, if you randomly select 100 people off the streets, there's no plan for anybody. Their plan is,
even if they have plans, 100 people who have plans, one of them sticks to it. That's the hard part. That's why investing is hard, not because of the numbers. It's the emotional, psychological part of the investing.
and if you go on YouTube to try and find a plan, unfortunately they send you to some
Please.
people.
Yeah, don't try to find a
You'll
plan
get some
on
pretty
YouTube.
epic plans.
Yes. So if you found this page, if you've leafed through all the other plans about buying high-flying, overpriced stocks, hype stocks that are incredibly risky and volatile, and you found this page, you're in luck because when the days are red, Paul, our live streams fill up with hundreds of people. We get tons of patrons, and people turn to us to finally look at the numbers when it all comes crashing down.
Yep.
That's our take. If you want to trade with Mo, join the Bidnass Nation in the Patreon. If you want our software, join the Patreon right now, and you'll get it today. And if this resonates with you, get on the ship, going in the right direction of value investings, and we'll welcome you in. Thanks for watching. Fondle the thumbs up on the way out like you tickle Paul's little flabby belly. And we appreciate your support. See you guys.